Morning everybody, it's Chris here from Serene Education. Just going to go over the four majors this morning, starting with our euro on the CTC strategy template. This is our 6-day intraday time frame template. Just going to go over the euro. As we know, yesterday the first part of the austerity plan for Greece was approved marginally by the government, and so we had a move to the upside just both before and after the news announcement. And on Asian market trading this morning, we've seen the euro gain even further momentum to the upside, clearing a prior resistance level that I mentioned around the 14,400 and moving further to the upside. Great news, CTC is all in our favor again, and we're back into clear space. Ideally this would be our top end, but be aware we have the intermediate downtrend in place. So roughly, if everything goes according to plan, then we could see roughly the 14,600 mark being the ultimate target for this pair as we edge higher. So as it stands now, look for buying opportunities on CTC. Let's see if there's any news. There is a bit of a pause at the 14,550 mark. However, there's less noise in this area going forward. So moving averages all below us on a daily. CTC is extended. Slight pullback, that's the norm as we go into the European session this morning. So be aware of that. So if you look at our 4-hour, you'll find most of our time frames intraday will all be extended blue. CTC will be blue, just to confirm that movement that we've seen in the market. You'll notice that the moving averages all crossed over, and our CTC has given us the go-ahead for further longs. The hourly would show us exactly the same picture. CTC blue. You see yesterday, the prior day leading to yesterday, a bit of indecision during the news announcement, but still staying above a previous resistance level, breakout that we saw of the prior day. Pulled back to it, and we saw a bounce higher. So on a major trend line for this particular time frame, intraday time frame, and we bounced higher, and you can see that we've cleared some noise and we're slowly consolidating yet again. On the Asian market, we saw a pullback, and we're pulling back to that Asian market area, resistance area. So roughly around the 14,480 mark. 1448 will be our intraday support level. So if you're trading the small time frames, 1448, make a note of it. That's going to be our support level for this time frame. A break below that, we'll see further consolidation to the downside. A bounce off that would see further upside movement. Be aware though, guys, that we are having the second measure of austerity plan measures being voted in the Greek Assembly this morning, or this afternoon, noon. This is for the next part of the bailout, and that covers the 5-year medium-term fiscal strategy that the IMF and EU have put together for Greece. They now need to vote on that and see if they are going to give us an all systems yes go for that. However, if they don't go and they don't get a resounding yes, then we could see some serious volatility occurring nationwide, EU, globally, in fact. So very important. We haven't got out of this yet. It's not a definite yes across the board, so we'll wait by our time. So what we're going to do is, obviously, you're going to see consolidation take place, and we're seeing that as such. But as long as price can stay above that range there I mentioned at 14,480 during the course of today, and we see a bounce higher during the US session, if the news is favorable, then we'll see a kick higher during the Asian market later this evening. But until such time, I'm not going to be trading this. I refuse to be trading volatility, and I'd rather wait for a clear indication of what price I can do, and then I'll catch the upside. Next pair is the sterling against US dollar, UK sterling against US dollar. Let's have a look at the daily. Yesterday, with the news that came out on Eurozone, well, Greece having the first part of its austerity plan measure approved by the government, we saw price pushing higher. Slight pullback now in the Asian market. Time frame leading into today's session. We've got news out this morning for this pair. We had nationwide figures. HPI down 0.3% on the HPI month-on-month figures. Then we've got at 9:30 this morning. We have the Bank of England Credit Conditions Survey. That could be interesting to watch for. But you'll notice that CTC is extended to the downside, and we are in a negative bearish trend. You can see the major trend has been broken. That's the intermediate trend. That's the new intermediate trend now as it stands. As we see lower swings, and recently we've seen a major move down, and you can see price is now testing that trend line. So it's above the institutional moving average, however, but it's now testing the prior support area on two fronts, both one that we saw in mid-May and mid-June. So failure to trade higher than that, plus this intermediate trend line, will confirm we're going to see further downside movement, and we could see a kick down to the downside. This is the breakout, the pullback, and the continuation for this time frame. So be aware of that. CTC is extended to the downside. We want to see a break and close higher than the prior strong support level. So an open at the open of this candle here at 16.1190. So intraday, let's put that in 16.1190. Apologies, 16.1190. There we go. The top end of this wick, as you see it. So you can see the price is rebounded or traded on the Asian market straight up to that level, and now we're seeing price coming unstuck at that level. So as it stands now, you can see the wicks, higher swings dictating that push to the upside yesterday or over the past couple of days. However, we've come unstuck, and you've noticed that we've had literally 5 hours of head banging at that 16.1100 mark. So could see a pullback back to the 200 or the 16.07 mark, and then that'll take us back to the intermediate uptrend for the intraday time frame for this 1 hour. So it'll be interesting. We need to see price breaking higher and trading higher than that. Otherwise, all we're going to see is consolidation on the underside of a negative downtrend that we are in, and we're going to see a push lower due to that, as that's going to be our breakout. This is the consolidation that we're seeing now, and price is pulling back to this level, and what we're going to see now is the second part of this breakout pullback and the continuation leg being broken. So we don't see price trading or staying above the yesterday's breakout range at roughly the 16.065 mark. Going into the latter part of this week, then what we're seeing is a definite the daily breakout, the confirmation pullback that we've seen over the past couple of days, and then we're going to see the second extension lower as sterling loses further ground against US dollar. Next up is the US dollar against Swiss franc. Let's have a look at the daily time frame. You'll notice this pair has been in a major downtrend for May of last year. So the ultimate trend is very negative, and you can see that in the past couple of weeks that negativity has got even stronger, and I can apply that to the chart. So the major trend, very negative indeed. I'll just put that in so you guys can see it, and then the trend just recently has got very, very, very strong, and the swings have got noticeably strong to the downside. However, we've had pullbacks along the way. We had a price support here that price reverted to and broke through, and then we had a consolidation and a clear run to the downside after that. Then we've noticed that we saw a full week of consolidation at a range here at the 8,300 mark. Bounce, 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 and then we saw a bullish engulfing, and we saw a reattempt of the previous support and resistance level here just above the 856 area. And then we had a bearish candle at that resistance level, which confirmed that we weren't going to see any further upside movement, and we saw indecision and then further downside, which then created this new swing low So we drew our line to the downside. And since then we've seen momentum to the downside, and then consolidation, and then momentum lower. However, it's taken us back to this prior support level that we saw in the early part of June, and we're now consolidating along this area. No direct confirmation, are we short or are we long? We need a candle of this magnitude, something with a bit more confirmation in the movement. At the moment now, the market makers, the guys out there with the cash, have not put their money where their mouth is. It's probably one way of putting it. And we want to see if clear indication we're seeing further downside movement, because the CTC is in our favor now, because we do have our red arrow, red candles, and the CTC is in our favor. We need a nice bearish engulfing candle to show momentum is confirming downside movement, and then we'll trade that direction. However, because we've seen further consolidation of this range here, are we going to see the US dollar gain a bit of strength somehow? And if that's the case, then we need to see a bullish engulfing candle to the upside. So a nice day of a full wick extension of buying and buying higher to the upside of the wick will definitely confirm that the momentum is now shifting, and we could see further upside movement. Until such time, though, it's still looking negative. So intraday, look for your setups to look for further shorting opportunities. If we don't see that occurring next day, then we're just going to see further consolidation along the band for this pair. Last up is the US dollar against Japanese yen. Let's have a look at the daily time frame. Yep, yet again we've seen the US dollar falling over against the yen and losing ground. Yesterday's candle, bearish engulfing, and Asian market trading last night has taken that forward, and we've seen a huge drop overnight for this pair, trading back past the upswings, higher swing, breaking lower than that and trading lower than all the moving averages, and the CTC in our favor. So is the 80 mark back on target again for this pair? It seems like it, folks. I really thought the pair was definitely going to be pushing higher, especially after the mini break that we saw. Price traded higher yesterday and closed higher. I was thinking, well, great, if we can get an entry on the top end of this to look at the next possible target, the previous high at 81.50 and the next high here at 8200. That was not to be. Yesterday we saw Asian markets opening lower than the close, and during the European session and US session falling lower, and Asian market has taken even lower during the course of today. So as it stands now, it looks like we might see the 80 back on the table again for further opportunities to the downside. Intraday, let's have a look at the hourly. You can see the negativity after hitting those highs. Price failed to post a higher high than the previous one and started the momentum short yesterday afternoon. We had a huge down candle, massive down candle, followed by a pullback. However, that pullback was limited in its move. So if we look at where price started the momentum to the downside, the fib not the fib projection, the retracement figure, you can see price pulled all the way to 61.8 and felled at the underside. Long wicks, indecision, more trading at the bottom end of the wicks, guys, confirming the negativity in the setup. Just before the break to the low, we saw a couple of candles showing a bit of momentum, and then boom, off she went. And if you had taken the start of that, the pullback, and the kind of, you can see 100% this morning has been hit on this time frame. So having the pullback, because 100% of that first initial move yesterday we saw has been reached, and now if price can stay below the institution moving average here at 80.50, consolidate around this area here, then we could see further continuations to the downside, because the trend now on an hourly chart is above us, quite a steep one, a lot of momentum, and the CTC is in our favor, and 80 would be back on the table as our potential first target for this particular setup. So there it is, guys. If it breaks above 80.55, then we're looking at this as a potential further upside movement. It fails to break above the 80.55 and consolidates around here at 80.50, and we see it trading lower going into the Asian market this evening. Expect further downside movement during the latter course of this week. That's it, chaps. Hope you have a fantastic trading day. just be aware that this afternoon, or noonish this afternoon, we have the second load of voting occurring on the Greek National Assembly for the second part of the austerity bailout plan for Greece that the IMF and EU have put forward. This is to work out the debt crisis. They have got a vote to decide on the 5-year measure, or the 5-year medium-term fiscal strategy that needs to be implemented. If they go ahead and they give a thumbs up, then it's going to just bode well for the euro for now. It'll patch up a couple of cracks that are starting to show in this wear. Otherwise, we get a no vote there, and it's just going to start the cracks are going to get larger, and we're going to see the wear actually breaking in the next couple of days. So it's imperative that we do get another yes, a resounding yes. Yesterday there was only a difference of I think probably 15 votes, so very close. A lot of people, they were expecting a slightly larger one, but it wasn't to be. Today it's going to be very interesting to see exactly how that pans out. So very, very important day today. Both euro, which will globally will be significant. So if you don't need a trade today, I advise not to. Rather let the market play its hand, and then we can look at tomorrow's trading and see how the market has taken the news, and then we can trade accordingly for the remainder of the week. So have a fantastic day. Trade serenely. If you are using the CTC, make sure you apply the right rules. Take care. Trade serenely.